once again.
Most definitely.
Now, guys, you should go back onto the market. Like, you should go back on the market, go scroll back and see like where price stopped. Why did price do what? What type of a trend was pricing? Do you guys understand? That's what we call back testing. I'm showing you guys the other side of the market. Now, when it comes to pairs like Euro, USD, and so forth, let's just do USD CAD. This is a very interesting pair that one of my students asked me to do yesterday. And a lot of people was like, okay, where do we go when the chart is like this? Can you guys tell me what is the first thing you would do? Daily chart.
Find the major key levels.
To be smart enough, turn your candles black. Then you can purely focus on market structure. Now, you identify where the price is. That is very important. The current price, what is it? 1,23,470. Am I right, guys?
Yeah.
So what that means, price is trading between which two key levels? I'm not continue. I'm not going on until you guys tell me this.
What did you say? Please repeat the question.
If price is on 123,000,
yeah,
that means which two key levels is price trading in between? You guys should know it off your head.
I think it's 126 and.
But 126 is not a digit of 5.
It's in 120 and I think 130. I think 120 and 1.
You think what? Now let's do this. It's 5, 10, 15, 20, 25, right, guys? Am I right, gents? Please answer me, guys, because that's when I know that you guys understand. Price is by 123, somewhere around here. That means it's trading in between which two key levels?
120 and 125.
Yes, thank you. So that means price is trading between. Now you don't need to look back. You can just focus here. Price is trading between 125, which is a major weekly key level, and 125. Now, this is 125. Now, 120 is very far from where the price is going to. We can all see prices dropping, right?
Yeah.
Now, 120 is far. It's over here. So that means for us to get a closer key level, what do we do?
Sorry?
For us to get a closer key level from 120 to 125, it's a set of digit of 5. Let's say 50, all right?
Yeah.
If you divide it in 2, what does it give you?
120.
50 divided by 2.
25.
25. So that means we would be looking at 122, 500. That's the last time where price stopped at. You guys see how easy it is to break it down. The only time we expecting price to stop is by 122, 500. Now, you can look deeper now. We can all see like how price stopped by 127, 500 here as well. Exactly. You can see how price broke below it, retested it, dropped straight to 125, even though price stopped around 126. Now, if you can pull a trend line, remember what I said. When you pull a trend line, you don't pull it from the old information because it does not exist anymore. You guys remember that? We always look at the current information if it's possible for us to pull a trend line. So in this case, if I decide to pull it from here, moving to the downside. Now, which we can see that price actually bounced off. Remember what I said, I like my eclipse just to have like a bigger understanding of where price actually bounced at. Price bounced there. Now, I want to show you guys something. When price stopped at this point, this point, this point, this point, what did the price stop with? It stopped with the week, right?
Yeah.
But with this one, price closed below with the candle.
It broke through.
It broke it. So that means you, in this case, you do what? You go out to your smaller time frame. Sorry, guys. And you look at what price is doing. And if price retests a key level with either a bullish or bearish engulfing, what do you do, guys?
Sorry?
If price breaks a key level, retest it with a bullish or bearish engulfing in the headed direction, what do you do?
Enter trade.
Find entry. In this case, we had a bearish engulfing over here, which you guys can see. That was the first sell of all the aggressive traders that went on this trade. Now, second trade in this case, the last time price stopped is here and here. We can all see how price stopped around this key area. So there's a box around this area of how many times actually price actually stopped, right, guys? Now, the first sign of bearish momentum coming out of this as well is this candle over here, this black candle over here, right? This bearish candle. First sign of bearish momentum. You enter with a sell. Your stop loss is going to be slightly above the previous high. Your next target point is going to be your next key area. Now, when the price moves, we get to key levels or support and resistance levels where price stops a bit. Let's say, for example, we cannot ignore the fact that price stopped around here, right? So if you put a line around it, when price gets to that point, can you guys hear me clearly?
Yes.
When price gets to this point, you take what we call partial profit. That is you closing half of your trade without closing all of it. You can actually close half of a trade. Did you guys know about that?
No.
We're going to close half of your trade. You're going to take the stop loss of the other half and you're going to put it at break even. So you're going to put the other half of the stop loss by your entry point. So your trade can turn into a risk-free trade. Does everyone understand what I just told you guys now?
Yes. Yes.
Let me charge just 1 second. Hey, you guys. that, guys. Now, can you guys see the easiest way for you not to zoom all the way out, not knowing where the market is going, identifying too many key levels in the market, and confusing yourself? Now we're gonna go on gold, and I'm gonna show you guys what happens with gold. Now with gold, the price is slightly different. You don't need to go all the way out to identify the trend from bigger time frame and blah 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 and stuff like that. Identify the key level that the price is at. Can we now with gold is obviously digits of 10. Okay, so can we identify it's digits of 10 and digits of the half, obviously. You guys know about it, right? So if price is moving at 17,081, that means price is trading between what key level and what key level, guys?
Is price, sorry?
If price is trading by 1781, that means we're trading between what key level and what key level?
81, is it 170 and 1?
Okay, here's the easiest way for you to find, right? 1,100 rand, 1,200 rand, 1,300 rand, 1,400 rand, 1,500 rand, 1,600 rand, 1,700 rand, 1,800 rand. That's how gold moves. But it's dollars, obviously. It's worth $1,700, $1,800, for example. Do you understand?
Yeah.
So in this case, I already gave you guys a hint. You're looking at two key levels. Which key levels are they?
So,
Should I
is
make
it one?
Okay, let's break it down for you guys.
1.8 and
1,000.
1.6.
It's what?
1.8 and 1.6.
It's 1,8 and 1,7. Price is by 1,781 rand. You obviously look at 1,007 and 1,008.
Yeah.
Simple as that. If price was here, I would look at 1,007 and 1,006. Like I said, 1,001, 1,002, 1,003. Do you guys understand?
Oh, I see now. Yeah.
Do you guys see now how you
Yeah.
Yes, that's how you break it down. So price stopped at 1,800, which is a main key level for gold. And obviously 1,700 is far. So if I want to look at the closer key level, which key level will I look at?
17,026.
No, the mid level is 1,750 because between 1,800 and 1,700 is just 100 digits. So in the middle, it's 50. 1,750. Do I explain it in a way that's understandable, guys?
Yeah.
Two key levels. Identify the two key levels. Price is trading in between. Step number one. Step number two, look at the mid level. Step number three, take a trend line. Step number four, find yourself a trade. Simple as that. Do you guys understand?
Yeah, just identify two, but they will take trend and find them.
Okay, so in this case, what type of a trend is gold moving in?
Uptrend.
Uptrend. I wouldn't look at that trend because it's exhausted. It doesn't work anymore. So I'm looking at that uptrend. I'll take my eclipse, identify where price bounced off. Now, after I do this, I can look at where price stopped it because I wouldn't just ignore it. The last time price stopped here, which we can see, fair enough. Last time price stopped over there. Fair enough. Now we can look deeper and try to understand what is the price doing now. Price is bouncing off 1,800, going back to the test 1,750. Do we all agree on that?
Yes.
In the smaller time frame, some of the guys actually were able to catch a trade. Because why? Small trend line from there going to the upside.
Broke trend line.
Broke trend line.
Came to retest.
It broke below this key area here. The first candle that gave you bearish momentum, what is it? This one, right?
Yeah.
Take a sell. Stop loss above previous high. Tighter stop loss. Take profit. Partial profit. You take it over here because that's where price stopped. So you take half profit. Or you can just close your stop loss at break even. The major take profit is us retesting that key level.
Yeah.
When price bounces off 1,750, we'd look to see what price does. If price gets to this point, in the smaller time frame, form a bullish engulfing, we bind the price back to this key level. If it breaks it, we bind the price all the way to 1,850. Because that's the closer key level. Now, we would take partial profit when the market get here because the market stopped around that area. So we would take partial profit and leave the rest of the profit to run. That's my trading strategy. Is it complicated? Is it complicated, guys?
Yeah, but we need to learn, you know.
You need to go back and see what is the price doing. In this case, look how complicated this chart would look. Looks quite complicated, right, guys?
Yes.
Because you don't know. Should you take a trend line from here and do that? Or should you just take it all the way from here and do that? No, I'm a day trader. I focus on what the market is doing now.
Yeah.
First thing to do when you go on a price chart, identify the price that where the price is at currently. Where's the price, guys?
The price is at
1,600.
yeah,
So that means we're trading between what and what?
169. Wait, come again, quick.
The price is at 1.16. That means we're trading between what and what?
16. So we're trading between.
Okay, let's go. Let's start. Let's do this. 5, 10, 15, 20, 25, 30. So 16 is between what and what?
15 and 20.
Simple. 15 and 20. That's where we're expecting price to stop if it keeps on dropping. 20 is very far. It's all the way here. Can you see it?
Yeah.
Now, for us to get closer, we're going to check the half of this too, which is
121. It's 17.
117,500.
Yeah.
That's where the last time price stopped. The last time price stopped as well. You see, now I can check anyone. So now I check price stopped there and price stopped at the bottom.
Yeah.
Trend line, if it's possible, market is moving in a downtrend. Now, I'm going to check this key level as well. Because the market is moving in a downtrend. It broke the trend line, which we can all see fair enough. We're all expecting the market to be bullish. Maybe until this key point over here. But for the fact that the market did not take out the lower structures. Oof, now we're going advanced, guys. Lower high, lower high, lower high. The fact that the market did not take out this lower high yet, price is still moving in a downtrend. Even though the price broke the trend line. We might be going here just for a double top, and then we might be falling, pushing back to the downside. So if you're not brave enough to buy this price, for example, like here, buy it, maybe till that point, just leave it. Pull a trend line if possible from here going to the upside and look at what the market is going to do. If we're going to get here, bounced off the trend line, break above, that means we break in structure and we're looking to go up. If price decides to bounce here, bounce on the trend line, break it, that means we're falling to the downside. And our initial target is going to be 115 because price usually stops mainly at the whole numbered key levels because those are the levels that the banks trade. Oof, I don't know. Did I go too advanced for you guys? One guy is very quiet.
My laptop battery just died, so I charged it. It switched off, so it's like restarted.
Oh,
sorry about that.
No problem. So what do you guys think about everything that I showed you guys today?
Yeah, you good, bro. You good.
Do you see that I don't see how my charts look? Clean, bro. I don't go all the way back, do things. If I'm back testing, I would go back. I would be like, okay, if I'm back testing, just to see if my strategy works, I'll be like, okay, maybe 110 is a major key level. 110. And I'd look at 17500. Like this is just when I'm back testing. Price stopped. Oh, okay. How would I catch a trade that looks like this? Pull a trend line and see, okay, price is giving me higher highs. Obviously, last time price stopped is here, so I'm not going to ignore it. So I'll buy price from here to eclipse the next quarter, which is 112,500. But when price gets to this point, I'll take partial profit. Do you guys understand? Go back and see how many times did the market respect your trading strategy? And that is what we call back testing. I'm showing you guys. I'm showing you guys what I expect the market to do now. Before I go anywhere. So I'm expecting gold to fall maybe to 1750. Even though I didn't catch the sell, it's fine. And I'll catch a buy from there, probably move to the next key level. If gold decides to go up, the first push is usually the length of the second push. So I will expect gold to play around it 1830 if it decides to go up. Go on a brand new pair. Okay, GU. Let's go on GU. We haven't done GU. GU is transparent with us. We're coming from 135,000 key level. We're obviously trading between 135 and 137,500, which is our main two key levels. I would look at 140,000 flat on the dot, but I'll obviously check where price stopped the last time, which is 136,000. So somewhere around this point over here. If we look at the current trend that the market is moving in, market is now moving in an uptrend. Because why? The market created a high, a low that is higher than the previous one. So, uptrend. There was a possible buy around here because the market was consolidating around these areas. If we can just clone it, and then price broke above. This is GU. Price broke above with the daily candle. On the small hour time frame, you go on a 2 hour or 1 hour or whichever time frame you like to trade on. See how price stopped. We go on a 1 hour chart. You can actually see. We go on a 15-minute chart. You can also see. Price stopped quite a couple of times. Remember, this is the close. Price started consolidating sideways. The first sign of bullish momentum was this candle over here. That was my buy. Stop loss below the previous low. 20 pips. Take profit, the next key level, which is over there. Is there a reason for me to take partial profit when the market gets to this point? Because it's a very strong level. So when the market gets there, I close half of my trade. Market comes back, stop me out with break even. I still make some profits. Market comes back to retest this area. Once again, go on to the smaller time frame. Market stopped. This was the first sign of bullish momentum. This candle here closes above. I take a buy. My stop loss is below the previous low. Market pulls back. It doesn't stop me out. My take profit is the next key level. When the market gets to the previous key level, I take partial profit, put my stop loss at break even, leave the rest of the trade to run till there. Come on, guys. Do you guys understand fully?
Yeah, but I'll just go back and retest.
So it's Friday today. We might be having another session tomorrow. I'll let you guys know. Go back onto the chart. See, look at the key level where price stopped at. See, price got exactly by 142,500. Started pulling back. So you know it's 142,500, 140 as a main key level. Then you look at from 140, 137, 500. That's where price stops. Look at the trend. That price was moving in. Price broke it. How could you possibly enter? Falling to the next key level, taking partial profit, leaving the other trade to run. Go back, see how many times the market respected this. You'll come back to me and you'll tell me, nah, man, this is something else.
It's too much.
It's too much, bruh. I know it's something new that you guys just learned. Something crazy. But you don't need to be confused all the time. Go back. Okay, when you're back testing, it's good to go back and say, okay, price stopped by 117, 119. Pull a trend line, see how price breaks it, retest it, enter, forward it. Just like that. Go back, see how many times the market did what you expected it to do when it gets to the key levels. But did you guys learn the most out of this session, or you guys didn't learn the most out of this session? Oh, actually,
I learned, bro. I learned.
Crazy day. What an amazing one-on-one session we had. Thank you so much. I'm glad you enjoyed the session. Go back onto the chart and see how you can back test it. I see you guys on the other side. I see you on the other side. Are we running?
Will you be sending us these videos?
Nope. This is the advanced side. I don't send the advanced side. We're gonna do it over and over again until you guys understand it. So you don't need to panic. Maybe I'll send you guys one video.
Yeah, one at least.
I'll decide on that.
So
Wait, cheers, guys.
keep safe, bro.
Say.